The world of work has changed, perhaps more dramatically than any of us could have predicted. The traditional office setting, once the cornerstone of our professional lives, is now just one of many options. Remote work is now the norm for millions. It's become a widely accepted and in many cases preferred way of conducting business. This shift has brought about incredible flexibility and new opportunities. It's not just about working in pajamas, although that's certainly a perk for some. It's about how your finances, especially taxes, are affected. The lines between personal and professional expenses have blurred, creating a whole new landscape of tax implications. Understanding your tax situation as a remote worker in the USA is no longer optional. It's essential to navigate this evolving financial landscape. It's crucial to keeping more of your money, ensuring you're not overpaying Uncle Sam, and maximizing your financial well-being. When your home becomes your office, a fundamental shift occurs in how you manage your resources. Your expenses shift, and what was once considered a personal expense might now have a business component. Think electricity, you're now using more to power your workspace. Consider internet and equipment. These are vital for your work, and understanding their tax implications is key. The IRS recognizes some of these changes, acknowledging the unique circumstances of remote work. Especially for the self-employed, the tax landscape offers both challenges and opportunities. Freelancers, who often juggle multiple projects and clients, and independent contractors, who operate with even more autonomy, need to be particularly aware of these rules. For employees, recent tax law changes have made some deductions trickier, requiring a closer look at what's still possible. But for the self-employed, there are still big opportunities to reduce your tax burden and keep more of what you earn. The government offers tax deductions to acknowledge legitimate business costs, helping to level the playing field for those working remotely. Don't leave money on the table by overlooking these valuable deductions. We'll walk you through the rules for the 2025 tax year, providing clarity and guidance, so you know what you can claim and how, empowering you to make informed decisions about your taxes. Every dollar saved on taxes, no matter how small it may seem, is a dollar you can use elsewhere, contributing to your overall financial freedom, paying off debt, reducing financial stress, and building a more secure future, investing in your future, securing your retirement and achieving your long-term goals, or just enjoying life, treating yourself and your loved ones to experiences that bring joy and fulfillment. The tax code can seem like a maze, a labyrinth of rules and regulations that can be daunting to navigate, but with the right map, you can navigate it, finding your way to the deductions and credits you deserve. Let's demystify these tax benefits for remote workers, breaking down the complexities and making them accessible to everyone. It's time to take control of your remote work taxes and unlock the financial benefits available to you. Let's talk about a major tax break that often gets overlooked, especially by those new to the world of self-employment and remote work. It's a powerful tool that can significantly reduce your tax burden, putting more money back in your pocket. I'm talking about the home office deduction. This is a provision in the tax code designed to recognize the expenses you incur when using a portion of your home exclusively for business purposes. If you qualify, and that's a crucial if, you can deduct a portion of your home expenses. Things like rent or mortgage payments, utilities, and insurance. This includes mortgage interest, a significant expense for many homeowners, and homeowners insurance, protecting your investment in workspace. Don't forget utilities such as electricity, gas, and even internet service, which are essential for running your business from home, and even certain repairs, those necessary to maintain your home office space. All of these deductible expenses can be subtracted from your taxable income, potentially leading to significant tax savings. This isn't some shady loophole or tax gimmick, it's a legitimate IRS deduction, clearly outlined in the tax code. But, and this is a big but, you must meet their specific criteria to qualify. The IRS has strict rules about who can claim this deduction and how. W-2 employees, those who receive a regular paycheck and have taxes withheld, generally can't claim this deduction due to recent tax law changes. This is a crucial point to understand. However, if you're self-employed, a freelancer, an independent contractor, or a small business owner, pay close attention. This could be a game changer for you. The home office deduction is fundamentally about fairness, recognizing that if you're using your home to generate income, you should be able to deduct a portion of the related expenses. Specifically, if you use part of your home exclusively and regularly for business, meaning that space is solely dedicated to your work and you use it consistently, the IRS, in its infinite wisdom, lets you deduct a portion of those related costs, but you absolutely must follow the rules exactly as they are written. There's very little room for interpretation here. The IRS scrutinizes this deduction very carefully, so accuracy and compliance are paramount. If you have a dedicated workspace, a room or area used only for business and nothing else, you could very well qualify for this valuable deduction. This isn't about occasionally answering emails from your couch or working from your kitchen table. It's about establishing and maintaining a true professional workspace within your home. Understanding this crucial distinction between casual work from home and a dedicated home office is absolutely key to claiming the deduction legally and avoiding potential problems with the IRS. Always be honest and accurate in your tax filings. It's always the best policy, especially when it comes to taxes and claiming deductions. The home office deduction can be a significant tax benefit for self-employed individuals, freelancers, and small business owners. But how do you qualify for the home office deduction? It's not as simple as just having a desk in your house. The IRS has specific requirements that you need to meet. The IRS has two main tests, and you must meet both to be eligible. These tests ensure that the deduction is only claimed for legitimate business use of your home, exclusive use and regular use. These are the cornerstones of the home office deduction, so let's break them down. Exclusive use means the space is used only for business. It's a dedicated area solely for conducting your work. No personal or family activities allowed. This is a strict requirement, so be sure to adhere to it. If your office doubles as a guest room or playroom or any other personal space, it likely won't qualify. The IRS is very specific about this. It must be a clearly defined area, physically separated if possible, dedicated solely to your business. Think of it as your professional sanctuary within your home. Regular use means you use the space consistently for business. It's not enough to just have the space. You need to actively use it for work. Not just occasionally. Sporadic use won't cut it in the eyes of the IRS. If you only work there once in a while or just for a few hours a month, you won't qualify. Consistency is key here. Your home must also be your principal place of business. This means it's where you conduct the majority of your business activities, where you handle core administrative or management tasks. This is often the deciding factor for many taxpayers. For example, if you're a contractor spending most of your time on site who manages bookings and paperwork from home, dedicating a space for these tasks, that space could qualify. It all comes down to where the core functions of your business are handled. The key to successfully claiming this deduction: get these definitions right to stay on the IRS's good side. Understanding the nuances of these rules is crucial. Don't risk your deduction by being careless. Accurate record keeping and a clear understanding of the rules are essential. Know the rules and document everything meticulously, and you'll claim what you're entitled to. Don't leave money on the table by missing out on this valuable deduction. It's about using your home as a true business asset and claiming the deductions you're eligible for. Let's make sure you do it right, so you can confidently claim your home office deduction. Once you qualify, how do you calculate your home office deduction? The IRS offers two methods: simplified and regular. The simplified method lets you deduct $5 per square foot of your home office, up to 300 square feet. Easy, no detailed records needed. The regular method requires more work but can yield a bigger deduction. You calculate the percentage of your home used for business and apply it to actual expenses: mortgage interest, utilities, insurance, repairs, and depreciation. You'll need meticulous records for the regular method plus IRS Form 8829. It's smart to calculate both ways to see which saves you more. The goal: legally minimize your tax bill. Sometimes a little extra paperwork pays off. Choose the method that fits your situation and record-keeping style. Don't leave money on the table by guessing. Make an informed choice for your 2025 return. Every deduction counts. The home office deduction is just the start. There are many other business expenses you can deduct. Think supplies, printer paper, pens, software subscriptions, and more. If it's essential for your work, it's likely deductible. Just keep those receipts. Professional development counts too. Courses, webinars, and trade publications can be written off if they improve your skills. Other common deductions: bank fees, professional dues, legal accounting fees, and advertising costs. The key expenses must be ordinary and necessary for your business. Track every expense and keep proof. Smart tracking means bigger savings at tax time. Let's break down everyday costs: technology, utilities, and supplies. For internet, if you use it for both business and personal, only deduct the business use percentage. Be realistic. If 60% of your internet is for work, deduct 60% of the bill. For phones, a dedicated business line is fully deductible. If you use your personal phone, only deduct the business portion. Utilities like electricity and water are part of the home office deduction if you use the actual expense method. With the simplified method, utilities are already included in the rate. Supplies used 100% for business are fully deductible. Keep those receipts. Don't overclaim, be honest and accurate. Careful allocation keeps you compliant and maximizes your deduction. Good records make it easy. Don't forget about state taxes. Remote work can make things complicated, especially if you live in one state and work for a company in another. Some states tax based on where your employer is, others on where you physically work. You might need to file in multiple states, be prepared. For the self-employed, Nexus rules determine where you owe taxes, especially if you have clients in different states. The rules are evolving, so stay proactive. Don't assume your home state is the only one that matters. If you're unsure, consult a tax professional with multi-state experience. Avoid penalties by understanding your obligations. The most important tax advice for remote workers: keep meticulous records. Good records are your foundation for deductions. Without them, you can't prove your claims. Save everything: invoices, receipts, bank statements, and documentation for your home office. For vehicle expenses, keep a detailed mileage log. Use digital tools or organized folders. Just be consistent. Make record-keeping a regular habit, not a last-minute scramble. The burden of proof is on you. Be ready if the IRS asks. Keep tax records for at least 3 years. For property-related items, keep them as long as needed. When in doubt, don't throw it out. Let's recap the best tips for remote workers to reduce your 2025 tax bill. Investigate the home office deduction, know the rules, and choose the best calculation method. Track every business expense, from software to supplies to professional development. Use accounting software or spreadsheets to stay organized. Don't forget about retirement contributions. SEP IRA, Simple IRA, or Solo 401k can lower your taxable income. Be aware of state tax obligations, especially if you work across state lines. Keep impeccable records for everything. Tax laws change. Check for updates each year. Use reputable sources or consult a tax professional to stay informed. Pay what you owe, not a penny more. Stay organized and proactive for a stress-free tax season. Approach tax time with confidence, not fear. Keep more of your hard-earned money working for you.